GM, Monday morning markets. We got a bunch of levels to dive into. We got a bunch of news that has hit with World Liberty Finance, with the US naval blockade on the Strait of Hormuz. So let's dive into it all, giving you that complete view with price action and the update of what's going on, starting with Bitcoin as usual. So Bitcoin had the bands go green, set the trap, bands went red, held the pre-war level though, and now bands have gone green again. So far, what Bitcoin has done is as follows. So if we go up to the weekly time frame, we've wicked last week's candle into this weekly imbalance over here. So that's now been tested, has held as resistance so far, and that is the 12 EMA on these bands. But as I told you guys, I think there's no reason why Bitcoin can't rally up higher to the 21 EMA, since these weekly bands are now flattening out. And often when you have a test of the 12 and it doesn't lead to new lows, you can find yourself going to the 21 band. So the lower time frames are going to dictate whether that actually happens or not. So let's dive into the levels here. Well, Bitcoin has this H4 gap that I've been talking about. And this is the H4 gap from the ceasefire announcement on Tuesday. But since Tuesday, we've had a bit of risk-off news where Trump has come out and put a naval blockade on the Iranian ports on the Strait of Hormuz, stopping ships flowing through, which has led to a bit of risk-off. As a result of that, you've seen your natural reactions like oil starting to actually gap up into this H4 imbalance over here, where price action impulse down, it's now filling it in, which I told you guys was likely as you started creeping up into it. That's why we took profit on all oil shorts. And if we go back to Bitcoin here, we go to the 4-hour chart, what we can see is Bitcoin has had that risk-off reaction as a result. So oil up constrains the economy, leads to risk-off flows as investors are less likely to put their money into riskier assets if economic situation is not favoring risk. So we got that sell-off and the signs were there. Bitcoin really failing to push higher. Every marginal push getting met with sellers, met with sellers, met with sellers. So what is going to happen when sellers are showing up and price is showing you that it can't impulse higher? It's going to go down. It's very simple. A lot of people will read too much into this move, but price action's always your guide. News just gives the catalyst either way. And what Bitcoin's been doing is holding on for dear life of this 50-day EMA, which is currently holding right now. But we're now closing multiple candles inside the H4 ceasefire gap. And you guys know the drill. When you start closing candles inside a gap, that's when it tends to fully fill. I can show you many examples. So here you have a H4 gap. As soon as you start closing candles inside, it's likely to fully fill. Again, you had a H4 gap over here. As soon as you start closing candles inside, it's likely to then fully fill, and it does. So you see this time and time again. We've now pushed up, found sell side liquidity. That's led to a move back down into the gap. So what I'll be watching today is on the low time frame. You've got a gap over here, which we can certainly rally into. So use the same logic. If we rally up into this gap, reject, and expect lower, and I'll expect this H4 gap to fully fill. If we rally up into this gap and we start closing within it, then I'd expect it to actually come up towards the highs for a sweep. And that is Saturday liquidity. That's not going to be hard liquidity to target if we do start accepting in the gap. So that would definitely be the target. So I'd either be looking for shorts on a sweep of the Saturday liquidity or potential intraday shorts off that gap if it's rejecting. And I think the overall target then for your swing trades, your multi-day, multi-week holds are going to be swing longs, since we've had those daily bands flip green on Bitcoin. So the bias is for higher, and I still think 76k liquidity inside candle monthly high at 79.4k can be targeted as long as this higher low structure remains intact. So levels to the downside are as follows. So we've got Bitcoin on the daily time frame here And we got the 4-hour time frame here to kind of zoom in and dissect this market a bit more. So I'll be either watching for this H4 gap to fully fill and find support, and then that can spring us up towards the highs again, or I'd be watching for this weekly imbalance. So you've got the bottom of this wick, which is untested. That's the weekly candle wick, and you've got the bottom of this daily candle wick that's also untested. Notice how previous imbalances, so over here, daily imbalance gets retested. You then have another daily imbalance. Gets retested. That then creates its own daily imbalance. And this one gets retested immediately, but also later on it holds again. And you guys get the picture. We set another daily imbalance there. Gets retested. Now, these are untested. So we have an untested daily imbalance here and an untested actually weekly imbalance now. So if we move that up to the weekly candle open over here. So that's what I'll be watching on BTC. Now, when we go to low time frames, either the H4C fire gap is going to hold if we fully fill it in, or I'd be expecting the weekly imbalance to hold. One of two scenarios. I think if we start trading towards the daily, then we're taking this liquidity, which is a change of character, because previously you've been generally leaving the liquidity. And when you start taking liquidity after having previously not been taking it, that's when you're actually likely to be going into a change of character in the markets and likely a bit of a risk off move. So, start losing that daily imbalance. That would be an inval, and I'd be looking for actual new lows then on Bitcoin towards the low 60s. So simple bias there to look for support to show up in either of those scenarios. Maybe the 50-day EMA holds, but given how much acceptance we've had in this H4 gap now, I wouldn't be inclined to bet on this holding. Could look something like this, and you could just consolidate if you stay within 71k and 74k, but I'd put that as less likely now due to this acceptance we've seen. So that's Bitcoin. That's the trade setups that I'd be looking on Bitcoin. But the wider market is really showing us what's going to be most likely to happen in those scenarios. So dollar right here, 100 psychological level. You guys know above 100, dollar rallying is going to be risk off. But rejecting 100, if you now come back towards the lows, that's going to be very much risk on. So I think this week's going to be huge to see if we're actually confirming this as a trap above 100, the same way we keep trapping above 100 before selling off. And if so, you're going to see that low get lost from last week, close below it, and that should then lead to eventual new lows. I don't think it's going to go there in a straight line. I think if we close below there, you're probably going to get choppy, lower high bounce. It's going to get really hard, and eventually you'll get that mark down, which will catalyze risk on across your markets. But alternatively, if you sweep that and then reclaim 100, that's going to set up a bit of risk off in markets. So I'll be watching the dollar very carefully there. I do favor 100 to get lost here and it to be more choppy. So you get bounces, which create a bit of risk off, but the overall trend is going to be lower. That is what leads to your bull market rallies, your bit of upside, your bit of risk on flows. And I think oil kind of confluences with that. So oil is starting to fill in this gap that it had when we got the ceasefire announcement. It gapped down, but it found higher low support, which was the key. Didn't break the structure on the gap down. Now, does it look like a high time frame top with this retest and failure to break out? Yeah, sure. But as I said in last night's video, actually, and pretty much every video last week, nothing's stopping this from having a mean reversion bounce and then selling off after. And I've got a short trade idea on oil where I'll be looking for this daily imbalance over here to actually hold. So if we go to the daily, you'll see what I mean. So you've got a wick there, untested, and I'll be looking for that. Or short setups, just from a mean reversion perspective, that would be filling in the gap, coming back to where supply overwhelmed, back to that ceasefire news. And unless the war's going to really escalate with US boots on the ground, which probably will allow it to actually break down and make a new high again, I think reversion back to there is what leads to a sell-off. And the news, again, is just going to follow. But remember, the ceasefire was announced around here. Price was already coming into resistance before the ceasefire news. So that's why, yes, me giving you guys this news is great because it gives you the context. But you don't want to trade from the news alone. You want to wait for price to enter those areas of high risk to reward, and the news will come. It will come. There'll be some sort of peace agreement or whatever that leads to it rejecting that resistance. You don't have to preempt it or wait for news to make your decision. Wait for price action. And that will show you everything you need to know. So that's the setup I'm watching on oil. Now, stock market is really interesting because if you guys look at this action on the stock market, every time you have it go below the weekly bands and then reclaim it, it tends to lead to bullish price action. So we'll start from the most recent one, since that's what you guys will remember the most. So tariff crash. February 2025, came down into the lows, lost that purple 50-week EMA, lost the 10 and 20 bands, they went red. But as soon as you reclaim the 50, reclaim the bands, and you importantly start consolidating in the upper quartile of this Fibonacci between the 0.75 and 1, it was ready to break out to all-time highs. We then had this again in 2023. So what was going on around October 2023? I can't quite remember what was happening here. I think this was when the ETFs were coming out for Bitcoin, but you kind of got that crash that nobody really knew what was going on during the period. Someone in the comments can let me know. My memory is escaping me. I know this one was a Silicon Valley Bank collapse where we lost it briefly, but bands held green. Then we had another dump later into 2023. May have been something to do with credit, I believe, if memory serves me correctly. But anyway, we lost the 50-week EMA purple band. We then reclaimed the 10 and 20 bands. They flipped green. And then you got that consolidation in the upper quartile. That led to continuation higher. Bear market in 2022. So lost the 50, lost the 10 and 20 bands. And then once they flip green, we can take the fib from high to low. So this is objective. It's not hindsight analysis. This one didn't consolidate for a lengthy period of time between the 0.75 and 1. And that's why you then got this extra flush back then. Now, this was the you-know-what crash in 2020. I won't say what because I'll probably get demonetized, but this is when we lost the 10 and 20 bands, lost the 50-week EMA, and then you came up into the upper quartile after reclaiming the 50, reclaiming the bands green. That then led to rallies, all-time highs. You're up only March, and a similar one in 2019. So lost the 50-week EMA, bands went red, fib from high to low, reclaim the bands, reclaim the 50, consolidate in the upper quartile, up only since then. So that's the big signal on the stock market. Right now, look at this. We've reclaimed the 50-week EMA. Bands are red. So these bands need to flip green in order for this pattern to play out again. And then we need to consolidate in the upper quartile from there. So it's going to be a big week coming up for the stock market. Can we consolidate in the 0.75 to 1 range? If so, bands are likely to flip green and could very well get the scenario where stocks are just going to go to all-time highs and we get a bit of risk on. That's going to lead to Bitcoin having risk on. You'd like to see Bitcoin head towards 80K. So it's all important to understand how all these markets are moving and investor sentiment. But because we're coming up into this upper quartile and the bands are still red, we're also at the place where we could see a rejection. You've had a red day on Friday. And if we go into the lower time frames, looking at stock market and NASDAQ, we're coming into a resistance level on the S&P. So that's 6840 JPM collar trade. NASDAQ, I think it wants to come up towards this monthly resistance. But again, you've moved super inefficiently upwards. You're in a great place where this can set up some short-term, short trades if we're not going to reclaim those weekly bands. Now, again, reclaim those weekly bands, get in the upper quartile, you have to start considering potential swing longs for new all-time highs. But you're in that small period now where it could reject, and that's where you can start to see some of these gap fills, and you've already opened up lower today. As you can see, gap down on S&P, gap down on the NASDAQ. Holding its daily gap right now, though. That's the key. S&P and NASDAQ both holding the daily gap, so wouldn't be surprised to see this rally up higher, even if it's for a sweep before a sell-off. And what's most interesting to me is really tech, because tech looks a lot weaker than the S&P. So if I was going to look for shorts, would be more inclined to look at the NASDAQ. You guys know the drill. Monthly imbalance over here. It's an untested wick on the monthly. You've also got a bunch of equal highs chilling there. So this is where I'd look for shorts on the index or some individual tickers, which I'm going to be diving into in about 5 minutes or so with a bunch of trade setups that I'm seeing across altcoins and stocks. So you've got a bunch of equal highs here. Got a monthly imbalance. I'd be looking for rejections there for a potential swing trade, and then potentially the gap fills in and we go higher later on, or maybe that's where we actually make new lows. But we're at that pivot point, I think, where if you don't get that acceptance and weekly bands flipping green, you're actually likely to get a rejection. And if you've gone up super inefficiently, and you've not had nice consolidation, so this is what you'd want to see as a bull. You'd want to see price just stay sideways here for a number of weeks. So that gives it a base to break out from then. But if you don't get that, that's why shorts set up best. That's why it's always price action dependent, guys. I can't give you guys setups that I'm going to take on YouTube. I can give you guys the ideas, but in the school, in the Discord, I can give you the setups, because literally, if price moves up into the monthly imbalance zone after consolidation, I wouldn't short. But if price moves up into it inefficiently, then I'd potentially consider shorting, because you've got more gaps to trade into. Exact same move, but different price behavior going into that move. That's trading for you, though. So that's the stock market, which leads into some setups. So we'll start with the altcoins, though. I know you guys love the altcoins. Remember, guys, if you want an exchange that you can trade on, you can trade Bitcoin, you can trade all of your altcoins, actually, with CoinM. So you can trade Bitcoin using Bitcoin, ETH using ETH. You can trade regular Bitcoin and ETH using USDT and all your other alts over here. Bunch of altcoins you can trade. Then you can also trade your metals with USDT, which is awesome. You can trade your stocks using USDT. You can trade absolutely any asset you want, and you get a massive deposit bonus here. So deposit 100, hold for a day, you get 100, and much more here. We'll let you guys read that. And with my link, you actually get VIP fees. So instead of this saying 0.04 and 0.08, it will say 0.02 and 0.06 for life. So make sure you take advantage of that. And if you are aware on another exchange, I know they've got this offer where you can drop them a message, send them a screenshot, and they'll give you whatever VIP 4, 5, or 6 level you have elsewhere. So that's a place where you can trade all of these stock setups that I'm about to dive into. So let's get into it, starting with Tau. So altcoins to begin with, then we'll move into stocks and commodities. So be watching Tau now. It's got a weekly imbalance above. It's created a range here. So you've got the weekly gap below, which we may well just start trading into. So wouldn't be surprised if we just go down into the weekly gap. If so, wouldn't trigger a trade for me. But if we can squeeze up towards this weekly imbalance, which is also going to be the premium zone of this range, now I'll be looking for potential shorts there, because that's untested on the weekly. That would then be targeting a full gap fill over here if we can get that set up, because you've got a clear bearish setup where we had momentum fail. You guys know from last week, trade of the week was a short of this daily imbalance over here, which I know a bunch of you took, which is absolutely awesome. So you guys been killing it. We shorted down there. And from here, I'd be looking for a retest now of the weekly imbalance for a potential short trade if we get it. Would be no trades if we just come straight down. Wouldn't be interested in that. Hype. So hype looks quite strong here. So I'd be less inclined now to short the daily imbalance. You've got a reaction here off of Sunday's red candle. But we're now almost reclaiming all of Sunday's candle. I'd likely see it at least sweep this high before going down. But if it can actually hold this, then I wouldn't be surprised to see hype actually head higher towards this weekly imbalance, since it's shown a bit of resilience to go lower, has retested the 2024 pivot successfully and held it, is flipping resistance into support now. So, higher to go. I'll be looking at resistance come in around that first weekly imbalance there, where I'd take a setup potentially especially if you move inefficiently into it. That's when I'll be most inclined to look for a short there. Nvidia, that's been one I've been watching for a while, as you guys know, for potential shorts. So you've got the weekly imbalance over here. This is where you had your news event failure, where you had a bullish earnings report on Nvidia, but price sold off in reaction. So I think retesting that level is what can offer some nice short setups. And that would be a sweep of last week's high. And since you've had a monster 2 weeks on Nvidia, wouldn't be a surprise to just get some mean reversion, even if it remains bullish. It can hold there and it can continue on higher later on. This can all just be a bullish high-low. But I'd want to trade it back into some of these gaps if you can get a squeeze up into that zone over there. So that's something I'm watching on Nvidia for a potential short. TSM, this one's pretty interesting. We've been talking about this one since around November. So got a weekly imbalance below, weekly imbalance above. We're coming into the upper end of the range here. It's a pretty bullish chart. It's been trending upwards while a lot of stocks haven't been able to trend upwards to new highs. So by no means is it bearish, but it is in a consolidation here. You have had a rejection from this weekly imbalance over here, where it's come back down, sharply rejected, unable to break higher. So wouldn't be surprised for it to just consolidate for a period of time. And if we can get it, I'll be watching for sweeps into the imbalance to then just hold for consolidation and likely goes higher from there. But that would be the short setup. I'd then look for a weekly imbalance long potentially. Maybe that will come next week or so, I'm not sure. But that's the overall setup idea for TSM. Then we've got gold. Been waiting for this one forever now on gold. So we have a daily imbalance above, which is actually untested at the moment. We've got a breakdown since then below 5K, that round number level, which is, obviously a super important level. So I'll be watching for this weekly gap that you can see on the left here. So if we zoom in now, you can see we've got that weekly gap where it looks like it wants to continue trading into. It's been quite efficient, so I wouldn't be so inclined to short now on gold. But if we see a rejection over there and come back into the daily imbalance, which has been tested once immediately the next day, but is no doubt going to be a strong level, I'll be looking for a potential long over here to trade it back up towards 5K. So that would be the setup for me on gold. Be watching for moves back down into this daily imbalance where we liquidated a bunch of longs, so we know it's a decent area to buy where other bulls were getting wrecked. So that's the idea over there. As always, we'll let you know what setups I take, how I manage to trade in the school. If you want to join, drop me a message on Telegram, second link in the description. And remember, if you want a place to trade all of these assets, gold, stocks, everything alike, head over to Yubit, first link in the description, and get your lifetime VIP fees. That's been Morning Markets. Let me know if you enjoyed. In the comments, drop a like, drop a sub, help boost this video, a small channel like mine. Appreciate all of you supporting every single day. See you in the next one. GM.